Hey everyone, welcome back to Corporate Decoder. Today we are diving into a Form 8K filing from Scorpius Holdings, Inc. and trust me, it is more exciting than its name. It's like finding out your quiet neighbor is secretly a rock star, but in the world of corporate finance. So let's see what Scorpius has been up to. This report tells us about significant events that a company needs to report quickly to the Securities and Exchange Commission, or SEC. These events could really affect the company and its investors, so they have to let everyone know what's happening. Think of it as corporate breaking news. This section is where companies talk about any big agreements they've made. Scorpius Holdings just made one such agreement and it involves money. Essentially, Scorpius Holdings borrowed money. It issued a promissory note, which is like an IOU, for $450,000 to an institutional investor, meaning a big investor like a bank or investment fund. The note isn't convertible, so it can't be turned into stock. It's a plain old loan. The loan has an interest rate of 5% per year. Interest is what the company pays on top of the borrowed amount. The loan becomes due or matures on the earlier of a few things. First, it's due May 15, 2025, which is not very long after this report came out. Second, it could be due if the company messes up on the agreement. There's a catch. When Scorpius pays back the loan, it will owe a premiums, which is an extra payment of 5% of the $450,000. So they're not just paying back the loan and interest, they're paying a bonus for the loan. The agreement has standard events of default, which are things that would allow the investor to demand immediate repayment. These include Scorpius failing to pay debts over $150,000 to other parties or defaulting on other loans they have. So if Scorpius runs into financial trouble, this investor can jump to the front of the line to get paid. There's a clause that if Scorpius raises more money in the future through another financing deal, the investor has the right to demand the loan be paid back immediately. This means the investor wants to be first in line to get their money if Scorpius gets a cash injection. The company is saying they didn't need to register the sale of the note with the SEC because it was a private sale to an accredited investor. This is a common way for companies to raise money without going through all the red tape of a public offering. This section just repeats that the information about the loan is what's relevant here. You can actually see the whole agreement and its specifics if you wanted to right now. Let's break this down and see what it all means. Why would Scorpius take out this loan and what are the implications? It's a short-term expensive loan suggesting they needed cash quickly. The 5% premium on top of the interest is a high price to pay. The investor clearly has a lot of power here with the ability to call back the loan if Scorpius gets other financing. This tells me Scorpius probably didn't have a lot of options and the investor sees a decent bit of risk with them. So what is Scorpius up to and what could happen to them? This loan suggests a need for immediate funds. It could be to cover a short-term cash crunch, invest in a project, or make an acquisition. But the terms are not great, which means they may have been in a bind. If they can't pay it back, they could be in big trouble, or if they do get more financing, they might have to use all that money to pay back this loan. The most notable risks here are the short repayment timeline and the high cost of the loan. If Scorpius doesn't generate enough cash or secure additional funding quickly, they could default. The investor's right to redeem the note upon future financing means Scorpius might not get to use new funds for growth, but instead has to pay off this debt. In conclusion, this 8K reveals that Scorpius Holdings is taking on short-term debt at a high cost. While they may have a plan for this cash, the terms of the loan are demanding and could put them in a tight spot if things don't go as planned. Investors should watch closely to see how Scorpius manages this debt and whether they can secure more favourable financing in the future. Thanks for decoding with me. If you found this helpful, give us a like, drop a comment and subscribe for more corporate deep dives.